You're hearing West Michigan Live on Wood Radio. Here again is Neil Dion.
All right. We have a special guest on with us this morning, and I think this is a very important topic that needs to be covered better than it perhaps is. I know that we've all seen the commercials about reverse mortgages, and I want to welcome in Shashank Shekhar, who is a best-selling author and real estate expert, also the founder and CEO of Arcus Lending. Their website is Arcus, A-R-C-U-S, lending.com. And, you know, I was under the weather a couple of days last week and was kind of a prisoner on my couch. And I saw ad after ad after ad. It seemed like every time it went to commercial, there was a spokesman talking about a reverse mortgage. Now, on the surface, it sounds like, you know, hey, this sounds like the greatest thing ever. But oftentimes, things that sound too good to be true can be exactly that. Mr. Shekhar, welcome to the program. Am I right to feel a little bit suspicious about reverse mortgages?
Yes, you are. It's, as you rightly said, on the surface, it sounds like the best thing that can happen to a retired homeowner who may or may not have enough income to sustain all the expenses that they have, because reverse mortgages, instead of you paying for the mortgage, the reverse mortgage actually pays you every month to take care of your expenses. So while that should be a great thing for homeowners, what they don't realize is that there are lots of additional fees and costs, and it's a very complicated loan program where you need to understand every single facet of the loan before deciding if this is right for you or not.
Consumer Financial Protection Bureau just did a survey of older homeowners and found that they were overwhelmingly given the false impression by the ads that reverse mortgages are actually a government benefit that assures consumers that they can stay in their homes for the rest of their lives. And I have to be honest, that's the way it sounded to me.
That's correct. Anyone watching that ad or the ads that gets aired on television or even on print, it says government insured mortgage, and that's a feeling that if I was not in the industry, I'll probably get the same feeling, is that it's insured for the homeowners. The surprising part is it's insured for the lenders. So this is a loan program that's backed by FHA, which is Federal Housing Administration, which is, of course, a government department. But the insurance comes to the lender, which means that if the homeowner were to default on a reverse mortgage, and if the lender were to lose any money, then the government will give the money to the lender to kind of mitigate their loss on this one. So don't be fooled by the fact that the ads say that it's government insured. It's not an insurance for you. It's an insurance for the lenders.
I see here that about 10% of borrowers end up defaulting on their reverse mortgages, and you know they're losing their homes.
You could potentially lose your home on reverse mortgage. That's one of the things that pretty much all ads will tout, that you can stay in your home till the time you die, and you can keep getting this money every month on the loan. What we need to understand is that if you are not able to keep up your property tax payment or home insurance, and if you're not able to maintain the repairs, then the lender can accelerate the payment and can even foreclose on the property, and you can potentially lose the home even with a reverse mortgage.
Doesn't it seem fair to at least mention the risks of a reverse mortgage in these ads? Isn't it deceptive?
It is, in a sense, also because of the fact that it's probably the most difficult loan product to understand, and the ads are being targeted to the age group, which itself is probably is one of the, I would say, the more vulnerable age group to say, because they are thinking that the biggest benefit that these ads are touting is the fact that you can stay in your home all your life and you get this money every single month. That being the case, it should be made understood that the fees and the costs on these loans are extremely high. You can end up paying 3 to 4% upfront and then the interest rates are charged on the principal balance. So it keeps adding. So your loan balance just keeps going up every single month. The interest itself is now not tax deductible. So all those tax deductions that we talk about, if you have a mortgage, you can write off your tax deductions. You can't do that. So there are a lot of things in here. Of course, when you're done with the reverse mortgage, you owe very little on the home because your reverse mortgage can go as high as up to the appraised value of the home. So you're not probably leaving too much to your heirs. And all of these should be explained very well. Unfortunately, either they are in the very, very fine print, which you obviously can never read on those television screens, or they are not mentioned at all.
Are they working under the assumption that perhaps many of the seniors who are looking at a reverse mortgage actually have their homes paid for already, and that this is a way to just, as the television commercial says, actually enjoy your retirement?
Yes, as reverse mortgage, as a rule, the older you are, the more equity you have in your home, and the less you owe on it, the more money you get. And that's how reverse mortgages work. In fact, that's probably the only three things that they look for when qualifying you for a reverse mortgage. You don't need to have an excellent credit. You do not need to provide income documents. Of course, you don't need to provide any bank statements or anything. So most of the qualification that goes into a regular mortgage, so to say, which we call conventional mortgage, or an FHA loan, which we talked about, it's a Federal Housing Administration loan. Those kind of qualifications are not required for reverse mortgage. So as long as you are over 62, and as I said, the older you are, the better, and you have very little mortgage that you owe on the current home, or if it's free and clear, the more money you can get. So those are the people that these ads are targeting. So those are the people who are prime candidate for reverse mortgages.
When they say, pay some bills or travel and enjoy your retirement, do you have to show that as income?
No, you do not have to. And I understand that it's not all bad. And of course, it does make sense for some person. As some people, maybe they have no income source, and they, of course, they still need to take care of the expenses.
Okay.
And reverse mortgage can be that solution. I'm not trying to say it's a loan program that nobody should look into or nobody should get. It's just that you need to understand the fine print. So there are other costs, and there are other implications, and you still have to pay your taxes on home insurance and keep up the repairs. So if you understand all of that, then it still could be a loan program that's good for you. Because if you have no other income source and you have a lot of equity in the home, at least you're able to get some income. And I wouldn't say it's an income because it's at the end of the day it's a loan, but you're at least able to get some money every month to pay off those expenses. I'm not sure if you should do that to take vacations and buy that car that you have been eyeing all your life, because those are the luxuries. Those should not be covered by reverse mortgage, in my opinion.
That's a very good point. You need to look at this not as income, but as a loan. And whenever there is a loan, you're paying that back. And that is certainly going to change the dynamic. But it was very fair of you to say at least this can work positively for some people.
Absolutely. I totally agree with that, because we either hear one side of the view, which is when you talk to the lenders or watch the ad, you would see only the good things about reverse mortgage, which is, as you rightly said, as in the visuals of as vacationing on the beach and buying those expensive cars, and you don't really have to do anything. Or you hear the other side of it, which is the fact that, you can lose your home, the interest rates are too high, the fees is too much, but there is a middle path to it where, of course, there are other expenses and some of the factors that you should be aware of. But there are benefits as well, because if that was not the case, if it was all bad, then at the end of the day, these loans are backed up by Federal Housing Administration, and they would have just shut this loan down if they thought that it was all bad. Also understand that the government does allow you to talk to counselors. They have FHA-approved counselors that you can talk to. In fact, you are required to talk to them before you get a reverse mortgage. So if you have any questions, don't just rely on your loan officer who's trying to sell this to you. Also put your questions across to this FHA counselor and make sure that you understand all the terms of the loan.
Very good advice. Are the loan rates typical or comparable, I should say, to a conventional mortgage?
They are to begin with, but understand that pretty much most of the reverse mortgages that are being sold right now are variable rate mortgages, which means that while when you begin the mortgage program, you might have comparable rates. We all know that it's expected that in future the interest rates will keep rising. So you can start with say 3%, 3.5% loan, but who's to say that won't jump to 5, 6, 7, 8% as the inflation keeps going and the interest rates start going over the next few years.
Do the people who offer reverse mortgages specialize in reverse mortgages, or are these available through conventional lending institutions?
You can. So conventional lenders can offer reverse mortgages, and there is no special rule to say that reverse mortgages need to be offered by a special lender. So you will see that any of the major banks, most of the mortgage lenders will offer reverse mortgage. In fact, one of the ads that CFPB has a problem with, which is Consumer Financial Protection Bureau, is by one of the major online companies. They run a different reverse mortgage company, but it's still part of the bigger company that they have. So they have just named two companies separately, and so yeah, you'd not require a special license for reverse mortgage, and as a conventional lender, you can offer it.
Very good. Well, very good advice. Very nice to hear the other side of the coin, and I appreciate your time. So, folks, do your due diligence. If you're considering a reverse mortgage, make sure you check the fine print. And as Mr. Shekhar suggests, talk to that FHA counselor. I can't thank you enough for being on the show. That's Shashank Shekhar, best-selling author and real estate expert, founder and CEO of Arcus Lending, the website arcuslending.com. We'll be back in just a moment.